Equity staged a smart comeback on Wednesday as a toned-down BSE circular stating revised guidelines on price band revisions assuaged investor concerns. The BSE Sensex gyrated 592 points in the intraday session but settled little changed at 54,526, while the Nifty 50 index recovered from its intraday low of 16,162 to end at 16,282. In the broader markets, both the BSE mid-cap and small-cap indices bounced back 2% each from their intraday lows to settle 0.2% and 0.8% lower, respectively. This sharp intraday recovery came after the BSE clarified that its new add-on price band framework would be applicable only on securities having a market cap of less than 1,000 crore rupees. Since the original circular issued on August 9 was silent on such eligibility criteria, broader markets were hit by panic selling. Investors offloaded shares of mid and small cap companies, sending the Nifty mid-cap index down over 5% in the past week, while the Nifty small cap index corrected by 10%. Nevertheless, under the new guidelines, securities in Group X, XT, Z, ZP, ZY and Y will now be subject to additional periodic price limits, that is weekly, monthly and quarterly price limits over and above their circuit limits. Further, a security placed in add-on price band framework will remain in the framework for a minimum period of 30 calendar days and will be eligible to move out if it does not qualify the provisions of the above framework thereafter. Business Standard spoke with Deven Choksky, Managing Director at KR Choksky Investment Manager, on what lay ahead for broader markets. This is what he had to say.
See, industry should not be particularly worried about all this. My point is that I think BSE has tightened the regulations pertaining to the mid and small cap companies because they were rallying in the market largely because of the the traders' activity into these counters. I think more activities were happening at the behest of the traders vis-a-vis the activities happening by the investors. So obviously they had to take some corrective measures to prevent, I think, any kind of misdoing as far as I think the stock price and its behavior is concerned. So which is what they've done. They've clamped on the entire activity or tightened the bolts, as we call it. I don't think that I think it is going to affect materially. But at the same time, in the current situation, the fall is happening more because of the fact that most of the players have been overbought into these counters. And obviously, I think they had to have some amount of, I think, offloading because of this new regulations coming in. So this is always a risk that I think at the mid-cap and small-cap level, who will bail you out? I think that is always a big question because I think these counters are not liquid. I think people are not going to bail you out in these counters. It's the day on which you are stuck. And this is what they're experiencing. I think most of the mid-cap, small-cap counters are getting damaged right now. I think some of the weaker companies, you will have the correction continuing, but some of the stronger companies, I think you might see the returning back of the stock prices. I don't think it is going to go down one way. In general, no, avoid market is not a good idea. I think you stay invested, but I think selectively you should got into the quality stock vis-a-vis weaker stocks.
Given this, investor reaction to broader markets will continue to hog the limelight on Thursday. That apart, primary market actions, stock-specific activity and consumer inflation data will be in focus today. Hundreds of companies are slated to post their June quarter numbers later in the day, including Ashok Leyland, Aurobindo Pharma, Aicha Motors, Hero Motocorp, IRCTC, NMDC, Natco Pharma, Oil India, Page Industries, Power Finance and Tata Steel. Meanwhile, in the primary market, Chemplast Sanmar and Aptus Value Housing Finance's IPO will close for subscription. So far, their share sales have been subscribed 26% and 37% respectively. Moreover, Cartrade Tech and Nuvoco Vistas closed their public offers with oversubscription of 20 times and 2 times respectively. On the global front, markets will react to the US CPI figures released overnight.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.